All right, guys, welcome back to the Educated Home Buyer, where my goal here is to help you buy right, borrow smart, and build wealth through real estate ownership and financing. As you can tell, I have a little bit different background tonight. I'm in a hotel, just leaving a real estate conference. I hope to provide you some value from that conference tonight, but the caveat here is the internet connection might not be great. So I'll leave it up to you guys to kind of keep me in the loop of what's happening on that front. If it's, blurry or it's not, the audio is not great or what have you. So keep me abreast. I apologize up front. And Josh is going to be out tonight because Josh is in Mexico. So Josh is enjoying Mexico. I'm coming out of a conference trying to unpack everything I've just learned and help educate you guys. So thank you for being here. Thank you for the support as always. So today we've clearly seen, what we expected, which was the Fed raising the Fed funds rate 50 basis points, right? It's been expected. We've talked about it. And they came out and delivered as they said they would, which is, exactly what we expected, exactly what the market wanted to hear. And because of that, mortgage rates improved slightly. Treasuries didn't really move. I talked to Josh prior to coming on here. His advice is still in this environment, even though there are some people out there thinking that, we could see a rally in interest rates. It's a good idea to lock loans at the moment just because there is still volatility out there. The Fed did say, or more or less to expect, another 50% basis point rise or raise rather in the next Fed funds meeting, and potentially after that as well, right? They're continually watching the numbers, continually adjusting. And hopefully, as I've said before, with that, the market is expecting that if they come out and deliver as expected, the volatility subsides a little bit. Hopefully interest rates, because interest rates, there's a premium on rates at the moment because of the volatility. So once that volatility slows down, hopefully we see a little bit of decline, maybe a step back in rates improving. But with that said, what's happening with inventory? I didn't get a chance to look at the inventory in the market coming onto the show, so I'm going to do that here in just a minute. But what I saw prior to today was that inventory's increased. It's continuing to move up in most markets out there. But let's be clear what that means, right? So I'm here at a conference at the moment, 1,000 top agents across the country. I mean, literally, in the United States, Canada, we've got agents from everywhere. And these are agents that a lot of you guys have been referred to when I've made that referral. But it's a similar story. And the similar story is that, yes, we are seeing more inventory. We are seeing some buyers getting priced out completely. Instead of having 20 offers, we're now seeing 5 or 7 offers. It's taken a little bit more time to get those offers in. So they're not coming in necessarily on day one. It might take them, 5 days, or, instead of 2 to 3, it might be a week before those offers come in. But many of them are still having multiple offers, which is continuing to push prices sideways to up. Now, inflation is clearly an issue, and it will continue to be an issue for some period of time. But with that said, prices aren't likely to decline. Now, I know a lot of people out there will have their beliefs on prices and what have you, but because supply is still well below where it should be, not just here in Southern California, but in many markets out there, and having these conversations with other agents, it's a similar story, right? And so with that, because supply is low, it is building, and it will continue to probably build for some period of time. You're likely to see a little bit of slowdown in the market, which means, I've heard similar stories of, people reaching out on videos, commenting on things, and more or less saying, hey, listen, I finally got my offer accepted. I'm excited, and I'm hearing more of those stories. So you're probably in a better situation at the moment if you are a buyer. Now, that doesn't mean you need to go out and buy a house. It just means it's less competitive at the moment. And again, it doesn't mean you're going to be able to go out there and lowball something and get a smoking deal, because that's probably not likely either. So just want to be clear on expectations. The market is shifting a little bit. And, I'm going to talk about a video on Friday where, how you deal with a buying, a changing market as a buyer, how to address the market, things that you should watch, look out for. But that's that. So what we're going to do tonight, right now, is dive into some questions, kind of get into this, and kind of move things along. So I'm looking for some insight on audio and visual. Is it okay? Give me some insight there if you don't mind. That would be helpful, just because I'm not seeing. I'm only seeing my side. So if you guys could let me know, that would be awesome. What it looks like. Yeah. So South Florida. I mean, I have people in here asking what's happening in South Florida. So a couple agents here in the Miami market, in the luxury space in the Miami market. And when I say luxury, I'm talking multi-million, 10, $20 million houses moving very, very quickly is what I'm hearing. Still low inventory, still things moving fast, multiple offers, all of that. So even with all of that, we're not seeing a decline in the environment. So good to hear. Thank you for those commenting on the audio and the video. So so hopefully that is helpful. Not a lot of questions in here tonight, guys. Without questions, guess what? I get off this and I go enjoy the night. So it is, but I wanted to be here because I said I would be here and deliver as promised. So, Flynn Estra says Randy Patrick was right, kinda, after like 20 years. No, Randy Patrick was not right. He isn't right, and he won't be right for a very long time. That guy has been calling for a crash for however long, a housing bubble 2.0. He's wrong. There is no housing bubble. Again, we're not talking crashes. We're not talking any of that. We're talking a mere slowdown in the market. What we've wanted, that's the thing, is like everybody thinks the real estate agent wants a crazy market. We don't. We like a normal market where buyers have a chance, sellers have a chance, things still move. And that's the market that we're still in. So let's not get confused by hearing a little bit more inventory that you think, there's a crash coming, because that's not what's happening at all. All right. Yeah. So there's a lot of consensus with regards to his ideas on the market. Me being here by myself, guys, you got to bear with me because I got to go through these comments. There's only one of us to get it on there, and so I'm trying to read and provide value and finding a good comment. So let's see. It was sarcasm. Okay, so good stuff. Yeah, no, I am with you, Flynn. It is definitely yeah, he has been wrong. And he will continue to be wrong, like a lot of other people out there at the moment. And it's not me, I have all the answers. It's just me being entrenched in the market, dealing with buyers and sellers, talking to agents that do way more business than I do, quite frankly, right? I mean, I on average do about 30 transactions a year as a single agent. I'm talking to people doing hundreds of transactions in different markets and using that to kind of come back to you guys and give you guidance on what's happening, not here in Southern California, but across the board. But George said, I'm scheduled to close on my first house on Friday in Virginia. However, the seller has not fixed the HOA violations yet. Should I still go ahead and close on the house? So I would advise you to have those things done prior to closing, because what happens is there's an association involved. Even, if you're able to make that transfer, many associations won't provide the documentation to the new owner until that stuff's satisfied. So you might get into a situation where if those violations aren't satisfied, the HOA doesn't allow the transfer to happen on their side. But with that said, I would advise you to get anything done, violations, repair requests, anything that's not completed, get it done prior to closing, because it's a lot more difficult as a homeowner, as a new buyer coming into a transaction. The seller's gotten their money, they're ecstatic, they're ready to move on. And your only or your only action of recourse at that point is to, try to go after them. And if they don't agree, then you end up in small claims court or what have you. It's a process you don't want to deal with. And quite frankly, the listing agent, it's their responsibility to make sure that stuff happens and deal with their client. So I would advise you to take, that head on and deal with it prior to closing. All right. So Lisa here is looking to sell in Murrieta, move to Delaware. New homes there are not being built for 12 to 18 months. No existing homes available. Will it get better? It may. I mean, it probably is going to get better. So my expectations over the next couple of weeks is that you're going to continue to see more inventory build, just because it is the spring. It's that time of year when homes do come to the market. But at the same time, you have, more sellers potentially panicking, right? There are sellers out there that that think there is a crash coming, want to get ahead of it, want to get out. So they're going to put their homes on the market. So you're going to have some of that. And you're headed into a slower time of the year, in a couple of months, which is typically the summertime. I talked about that in a recent video where the summer gets the credit, but all of the work is done in April, May, and June. So most of the homes are closing or going into escrow in April, May, and June and closing during the summer months. But typically the summer months are when things start to slow down. You just don't see the effect of the slowdown until a couple of months later because of, people on vacation, that, they're traveling, they're not really looking at homes during the summer or what have you. And so you're going to see inventory continue to probably build in many markets out there. Now, the new construction phases and all of that, depending on where you're located, those are probably in many markets, like you mentioned, 12 to 18 months. I mean, they're not able to build construction much faster than that because of, rules and regulations and fees on breaking ground in many places like California. It's a process to break ground in California. It's expensive to break ground in places like California. So if there's building already in place, then that's construction that will likely happen within the next 12 months. But I wouldn't count on it being exactly 12 months because you're going to have additional supply chain issues. I mean, there are things getting resolved out there, if you will, with regards to supply chain, but you haven't seen the effect of the recent lockdowns in China at the moment. That hasn't impacted the market at the moment, right? We're going to see additional supply chain issues because, and it might not be lumber, it might not be, the things to build houses, but it might be things that go into houses to finish these houses. And so that is going to become, more of an issue. You're probably labor is still a problem for many builders out there. So many factors playing into it. What I'm getting at here is that you're going to see more inventory. Doesn't mean it's going to be any less competitive, especially if there's a market where there are no homes available at all. Now, if you're in a market where there's already some inventory and you get a little bit more, that's a good thing. That's a good thing for buyers. And we're seeing it here in California at the moment is we are seeing inventory pick up. We are seeing the market move, but it's still competitive. If you got a home that's priced right, it's going to sell. It may not be immediately, but that also doesn't mean you're going to have to do a big price reduction or a price reduction at all. It's just buyers have more options. They're looking at more property. They have, it's taking a little bit longer to make a decision now because instead of just one property to choose from, they have 4 or 5 maybe to choose from. And so they actually have to think about what they want to buy versus it's the only one I'm buying. That's it. And it's very easy to make a decision in that case because there aren't options. So as more options come on, things are going to slow a little bit. So hopefully that's helpful for you, Lisa. It's, just making the right decision. Don't buy something you don't want to buy just to buy it. But if it's the right one, maybe you do, do what you need to do in order to make that happen. And if you hear my wife clearing her throat in the background, she's over there reading her phone, probably making fun of me in some form or fashion. Here we go. So Nikki says, do you think there will be more mobile home parks developed to help with supply and affordable housing? Unfortunately, it's hard for me to say. I mean, the thing with mobile home parks is they require land. Here in Southern California, we don't have a lot of available land. So that's not going to be the solution here in Southern California. In some areas of the country, that might be a solution. Now, is it going to be a solution that solves the housing crisis, the housing shortage, so to speak? No, it's not, because it's not sustainable to be able to build all of that. And again, I don't know where supply chain issues are on manufactured and mobile at the moment. I don't know if they're able to get the supplies to finish some of these things. So if that's an issue, then I don't know that is going to be something that helps at the moment. So it's to be determined, but depends on your market. If you've got a lot of available land, you might see more of it. But that one is a hard one for me to answer just because I don't know for sure. So question, talk about recent offers you made or offers received. So an example is just listed a property in Los Angeles County and priced right for the market and doesn't have offers. It's in a neighborhood that's popular. It's getting showings. Open houses were busy. No offers on the table. Now there are other properties in the neighborhood that are also sitting a little bit. So I think with that being said, that to me shows the market is a little bit slower, right? People, again, it kind of goes back to what I said a minute ago with writing buyer offers. Last buyer offer I wrote, thought we actually had a pretty good chance. We went 50,000 above the asking price on a property in Orange County, and there were 2 offers. We were a multiple. I was told there were two at the time, and this property had been on the market a couple of days, and the offer didn't get accepted. They went with a cash offer. They went with a little less price than our offer, but it was still above the asking price, and they chose to go with that offer because it was cash. You know, 21-day close or 7 days to release all contingencies. For the seller, that was important to them, even though we were offering more money and we had 20% down. Solid client, they chose the cash because of that. So that's hard to compete with, but that's the only recent example I have that comes to mind, just because I've been out of town for nearly a week. But coming back, I'll hopefully be able to provide you with a little more insight on that. But in the conversations I've had while I've been here, I've heard more buyers getting offers accepted. Again, because I do think there's less competition out there. I also think, buyers have a better grasp on what to do in the market, which is also helpful. And I think there's less buyers having to go way above, waive contingencies, do a lot of these things that you've had to do in order to be competitive. I think you're going to see less of that. So hopefully that is the case, and it becomes more of a normal, quote unquote, normal market. Brandon's asking the question: what value to the sales price of a single family home does an accessory dwelling unit add in general? Some price per square foot as main home, Bay Area market. So that is a really, really tough question to answer, because there's not a lot of properties out there to comp on these things. So it's hard to determine what value that thing adds. Now, you could say, well, you take the price per square foot of what the regular house would be selling for and then add the additional square foot, and that's what it is. And it's not really the case. It depends on the market. How much rent does it bring in? Are you renting it? What can it be used for? There's so many factors that go into these ADUs, and not all ADUs are the same, right? Some ADUs have, living spaces and full on kitchens and bathrooms and what have you. Some of them literally have a sink and a toilet and room for a bed and maybe a counter for some sort of appliances for a kitchen. So they're all a little bit different. Very hard to say how much they add value. It really depends on the area. In pricing out properties that have ADUs to try to get comps, you try to find something that has had something similar and how far above the price they went in order to help yours out. But I don't know that there's a one answer that fits the bill. But a lot of times, if it cost you, $100,000 to build an ADU, that doesn't necessarily mean you're able to take $100,000 and just add it on to the cost of your single family home, and now your home's worth $100,000 more. It doesn't necessarily work like that. So you got to, again, try to look at the market, see what comps are out there. But really an appraiser question. We do have them in my market, but they're not as common that it's an easy answer for me to come up with. Any offers accepted using down payment assistance? So Ed, I haven't had a down payment assistance offer in a long time. It's been years and years and years. In fact, on any listing that I have had, I haven't had any offers submitted that have had down payment assistance. So I unfortunately can't really answer the question. But I can tell you, what I know to be true is that in a competitive market, down payment assistance offers are obviously tough to get accepted, because if you're up against somebody that doesn't have down payment assistance, then typically that looks like a more attractive offer. And depending on where the down payment assistance comes from and the guidelines and the rules and all of that, it can really bog down the transaction, and people kind of shy away from that. So you'll see more down payment assistance if we were to see more of a buyer's market, but I don't see that happening anytime soon. Now, that doesn't mean you can't use it. Doesn't mean it's not common in your market. It just means I'm not seeing it. And so it's hard for me to really give you any advice on it. So Al says, who owns the sidewalk and the grass on the other side of it? So the city owns the sidewalks. It's their responsibility to take care of them, at least where I'm from in Orange County. The grass on the other side of it is owned by you. But the city essentially has an easement on that grass for the most part. But what happens, typically speaking, I don't know the right measurement now, but from the center line of the street, like 15 yards or 15 feet or whatever the number is, the city essentially owns that land. So with that being said, the grass that's out there is owned by you. It's part of your lot, but the city essentially has some rights to it with regards to, you know, access to sidewalks and easements and all of that good stuff. So I'm not sure if you have a more elaborate question, but hopefully that is helpful. But if something happens to the sidewalk, it's up to the city to take on that responsibility and repair it and what have you. If it's a trip hazard, that's the city's responsibility in most cases. But what you'll see is a lot of cities, maybe they don't have the funding for that, or they take their time in doing it. So in many cases, I've seen homeowners go out there and take care of it themselves and take over that responsibility that's not really their responsibility, just to get it done. Now, I don't know how the cities look at that, but something to consider. So Lisa, or Jay Homeboy rather, when is it smart to do a 5 or 10 1 arm loan? Is it knowing that you will pay off the house, or knowing that you will be paying off the house, or knowing that you are going to refinance before the 5 or 10 year mark? I think so. Um, I think if you know for a fact that you're going to be out of the house less than 5 or 10 years, in whichever case that you use, maybe it's an option for you. Typically lower interest rates, um, and it might allow you more buying power depending on how they use it to qualify you or what have you. So in that case, it could be something that you consider. But now, if you know for certain that that's your forever home, you're not moving, it's difficult to say to take a 5 or 10 year. I mean, I don't know if you were on the last call where we had this. In the past, I've had shorter term loans. I have a 30-year fix now. I don't know that I would ever vary from a 30-year fix, and I have a gambler mentality to some extent. I'm okay with volatility. I'm okay with risk, but I just don't think about a 30-year fixed, right? It's there. I don't think about my payment. I don't have anything to worry about. I'm okay with it. But yeah, if you have a shorter term time horizon that you know you're going to be selling or refinancing or paying something off, maybe that you're going to refinance if rates come down, and you have an idea that rates might come down in the future or what have you, then maybe it's something you consider. Or if you know you're getting a lump sum of cash, you're going to be paying off that loan or what have you, those are opportunities where you consider the 5 or 10 year. But you got to be okay with the unknown, right? The idea that it might adjust at the end of that 5 or 10 year term, and it might go up, and there might be, at that time, it might be rates might be higher, so you might be having to take on a higher rate at that time, or maybe there's a chance that you don't qualify because rates are higher and your income's changed or what have you. So there's just risk in having those 5 and 10 ones. But if you're okay with it, then by all means, give it a try. So Anya says, how much value does a new roof bring over 100%? Does it bring over 100% return? Not necessarily. New roofs, like if you have a $500,000 home and you add a $20,000 roof on that house, doesn't mean it's worth $520,000. It's what somebody values that replacement for. Because it had a roof on it prior, and maybe the roof would have held up and you could have still gotten $520,000 without the new roof. So it is not an exact science. An appraiser would be able to tell you, maybe they give you a little bit more value or a little bit bump in an appraised value for that, but it's not going to be anything close to what you actually put in to the roof. So it's tough. I think you have to look at the full picture. What else in the house needs work? For example, I just sold a property in Lakewood, California. The house needs a new roof on it. I still sold that house 5% above the asking price, and it needed a roof. So in that case, had they done the roof, would I have been able to sell it for even more? I don't think so. Personally, I had 5, 6 offers on this property, all solid offers, all pretty close to that 5% above the asking price, that 950 price point. Again, I don't think I could have stretched it much further, even with the roof on it. I mean, that 900 price point that we put out there was kind of with the idea that, yeah, it needs a new roof, but it's priced right according to market. We didn't take off the value because it needed a new roof. So each case is going to be a little bit different, but it all is what the value the buyer sees in that upgrade or what you've done. And that goes for pools or kitchens or bathrooms or any of that stuff. Just because you put $100,000 into a backyard to build a pool doesn't now mean that your house is worth $100,000 more. It doesn't work like that. Green car, what will the Fed hikes do to the housing prices? So I don't think the Fed hikes are going to do much to housing prices personally. The two aren't necessarily correlated. There's a lot going on outside of the Fed hiking rates, right? They're hiking rates to tame inflation. Inflation's probably going to stay high for a period of time. You're going to see a little change in the numbers just because of how it's calculated. And the Fed's likely to continue to hike the Fed funds rate. And I've talked about this at the beginning of the show, but the Fed hiking the Fed funds rate doesn't mean house prices are going to come down. Again, it comes down to supply and demand. So the question is, how does the Fed hiking the Fed funds rate affect mortgage rates? How does the balance sheet runoff affect mortgage rates? Because the effect on mortgage rates has a bigger impact on house prices than anything that's happening with the Fed action, the Fed funds rate itself. So the balance sheet runoff is the most important piece. The market reacted really well today because of they came out and said that they were out of the 17 and a half trillion that they were going to let run off. What was it? I forget the number. Run off instead of 35. The market liked that, right? It was less than they thought. The market had a good reaction to it, and rates actually improved a little bit. So until something happens with rates, and if rates continue to rise and if affordability is continued to be affected, that's when you see an effect on home prices. But I don't see that happening right now, right? It's going to take some time for rates to stay up, for that to affect demand, for that slowing demand to allow supply to build, for that supply to build to actually affect housing. And even then, we're far from a balanced market. You've got to have enough supply build to a point where it affects, over the overall market before you see a reduction in prices. Now, that doesn't mean that prices don't stagnate, don't move sideways, but the homes that you're going to see with price reductions are the homes that were overpriced to start with. Maybe the seller thought it was worth more, maybe the agent thought it was worth more, or maybe the house next door didn't sell for what they thought and they priced it based on that, and some adjusting there. But overall, I think you're going to see a market that's still gradually moving sideways to up. So Alex asked, with affordability almost at a record low, do you think price growth is going to be flat? So I don't. I think you're going to continue to see some price growth personally, just not at the rates that we've seen. Like I just said a minute ago, I think you see more sideways to, to maybe up a little bit. You're obviously not going to see the 10%, the 15% gains, in my opinion. I was wrong about that coming into this year. I didn't think you would see the hotness that we saw at the beginning of this year, because I thought a lot of the demand in the market had already happened last year. And I thought with some small jumps in rates, you might see a slowdown. That didn't happen. But I do think there's still demand out there looking for the right properties. There's still some properties selling for over ask, and that's going to continue to move the market a little bit. Mr. ABS, should you create a range when getting pre-approved, one from a bank, private lenders, and well-known popular lender, or will they all be fairly similar in approval amount? So no, you should definitely get a couple of different opinions. You should talk to a broker, talk to a bank, maybe talk to a credit union, because all of these banks have access to different programs, right? A bank typically has their programs, their portfolio loans that they do. If you don't fit in the box, then you can't get a loan from them, or they can't stretch on, maybe they only allow certain debt to income ratios or only allow certain credit scores because of what their overlays on their programs. Credit unions have something similar. Brokers typically have access to those banks and access to other people. So they're a little bit more flexible on guidelines. They can typically get you a little bit more, qualifying power, and they're able to shop rates. So there's a benefit of that. But even then, it might be in your best advantage to talk to a couple of brokers, compare them, compare what fees they're charging, compare what rates. More importantly, compare the service, the communication, the knowledge of who's on the other side of that, because that is ultimately, what you're shooting for. If you've got, if you're qualified for a great amount or a great interest rate with one guy, but they can't get the job done because they're incompetent, then what does it really matter what interest rate you're getting? I mean, I just had this scenario on a listing that we had. The buyer wanted to go with, their lender. They had gotten pre-qualified through my lender, and my lender, Josh, at the time told him, hey, listen, that's a great rate. Like, they're quoting you a really good rate. I can't compete with that. Well, they went, and instead of using that lender, they went out and tried to find somebody less expensive, and they did, but the experience was horrible. Like, they complained about it. I had to get involved, go above their loan officer's head and find somebody at the bank in order to help me get to the finish line. So they almost lost the property because, they went with the guy quoting the best rate, but he had no idea what the hell he was doing. So just be careful in all of that stuff when you're making that decision. All right. Let's see. Audio and everything is still good, I hope. Let's see. Music. Freedom says, do you think the forgivable 10% down payment California just announced will create more demand? Is there an income limit? So I know nothing about this. If it came out today or within the last 2 days, I've been submerged in real estate conference, so I haven't done a lot of external reading outside of like basic economics. So that's something that's new. I'll check it out, and I'll be back here next week to talk to you about it. But I'm not familiar with it, but I will be by then. Let's see. But with that said, though, let's go back to that. So music freedom. So a forgivable 10% down payment. So where's that money coming from? That's the question that I have. How are you going to have access to get it? What is California? How are they getting involved in it? Like, what's California benefit, right? Is there a benefit for them? Does it have to be repaid? There's a lot of questions I have on that. But I'll have the answers hopefully when I come back to you and be able to address it in a little bit more detail. All right. So we've got, that's not a question, but we've got the Terminator saying, are 2-car garage houses much better for resale perspective than a house with a 1-car garage? In my experience, yes. It's like a 2-bedroom versus a 1-bedroom. There's more people out there typically looking for a 2-bedroom versus a 1-bedroom. Therefore, those properties are usually, in my experience, they sell quicker than the 1-bedrooms because there's more people in that buying pool. Same thing with 2-car garages. There's more people looking for 2-car garages than there typically are one. So those tend to have more buyers, and therefore they sell quicker and at higher prices and what have you. Now, in the market that we're in now, maybe that's not the case because of affordability and what have you. But yes, the 2-car is typically what you want to go with if you can. This cap here is driving me crazy. All right, so let's see what we got. So Mega, I'm trying to get the name here. So Mega, I have no idea where we're going with that name, but we're just going to call you Mega. I'm planning on buying a duplex and renting out the back house. I'm able to use the rent as income to be approved for a loan. Yeah, you are. You're able to use incomes of that property in order to help you qualify. Now, in the case that it's a duplex, they're probably going to use 75% of that rent of the second unit in order to help you qualify. Why don't they give you 100%? Because typically there's expenses as a property manager, as an owner of a property that you have to pay. Maybe property management fees. Maybe there's things on that property that have to be fixed and what have you. So they take a portion of that rent out and don't let you use it for qualifying, but it's typically 75% of the rent added to your income, in order to help you qualify. So the answer is yes on that. So if Biden cancels student loans, how much will this increase home prices and buyer demand? Hard to say. We had some friends who he had student loans, a lot of student loans, and he was able to get them forgiven. And so with them, for example, it added a lot of monthly income back into their debt to income, right? I mean, their income towards debt. So if they were in the market to purchase, they would be able to qualify for more because that debt is now gone. It's hard to say how this is going to impact people. Unfortunately, what I think you have a society at the moment where people haven't had student loan payments for over 2 years anyway. So they're already living like they don't have them. in my opinion. And so the idea that they're gone just allows them to keep doing what they're doing now. I don't necessarily think it in their mind doesn't add more buying power. Now, from a qualifying standpoint, it does, because in qualifying, even though you didn't have to make those payments, they were still there. So just keep that in mind. I think people have been living high on the hog, so to speak, because there have been things canceled and not having to be paid and what have you. So actually canceling it only allows them to continue doing what they're doing, which is doesn't necessarily change anything on that front. So let's see. Silent. It's silent when no one's talking. It's hard. Mega Asper boy. All right, there we go. We got clarification. Um, I'm reading, guys. I'm trying to find you. Question here. So Ganza, new to real estate investing, have a question. I reached out to a loan officer. They submitted all the documents they required from me. It's been almost 2 weeks. Is that okay? That's a long time. In order to get pre-qualified, I'm assuming that's what you're going through there. That should happen pretty quickly. That shouldn't take 2 weeks to get done, unless you have a unique scenario, a unique situation where you've got income maybe coming from some other places or whatever. It shouldn't take 2 weeks. You should have an answer back within a couple of days of whether or not you're pre-qualified. Some cases, maybe the next day. So I would maybe try to, maybe find somebody else that maybe can help you out on that front. So Ali says, you think it will make a difference if I do a HELOC now or wait 3 months? So all of the spring contracts will be shown as sold in the system to make the property value higher. HELOCs are one of those things that, the question is, do you need all of the money from the HELOC? Like, are you taking it to max it out? If you're taking it to max it out, and those spring contracts are going to give you significantly more, then maybe. But I would tell you, HELOCs are one of those things that if the market, not that I expect this to happen, but we've seen it many, many times before, but as the market starts to change, banks, shift their guidelines. And the first thing they do is cut homeowners access to equity lines because they don't want the risk of people running it up and what have you. Not that I expect that to happen, but I would tell you, getting a HELOC is something I would probably do sooner rather than later, because again, if interest rates, I don't know where interest rates are going at the moment. I'm under the belief, and I've been wrong in many ways on this subject, but I think as the volatility subsides, you see a little bit of pullback in rates. And so with that, you might be able to get a little bit lower rate. But that's not going to happen immediately, is where I was going with that. But I think what the market's doing now. This is a conversation I have with sellers all the time, and even buyers. You know what the market's doing now. You don't know what it's going to be doing in 3 months, 6 months, whatever. And so if you need the money for the equity line, I would say just do it, have it there, and be ready to go. And if you know that you're going to be, if you're not going to use it for some period of time, and you're okay waiting and maybe risking a little bit, then maybe the future allows you to do that. But I'm under the belief that if you're going to do it, now is just the time. Get it done. You know what the market's doing. You know what to expect, and you don't have to worry about where things are going to be in a couple of months from now. So Benjamin, when it comes to applying for an FHA loan, is there a difference between going through a mortgage broker, bank, or credit union? In some cases, yes, because as of what I mentioned a moment ago, many banks out there, credit unions have a certain limit on their debt to income ratio and what they'll allow for an FHA loan, right? FHA has their guidelines. I think you can't go higher than don't quote me, 47%. I don't remember the number right off the top of my head, right? That's their ratio. But many brokers out there can get them approved at 57%. So you're likely to be able to qualify for more home going through a broker versus your traditional bank. And credit's a big one, right? If you don't have perfect credit, some of these banks won't do it in FHA because they have the overlays that says, hey, we're only doing 640 credit scores and higher. Well, if you have lower than 640, you're not going to be able to do that. Many brokers out there have access to lenders that can do them under 640. So those are things you need to weigh. Now, if you're a perfect client, you got great credit, great income, low debt to income ratio, then maybe the bank's the best option. But it's not going to hurt you to have the conversation with multiple, get some quotes and use them. But when you do that, make sure it's done on the same day, right? You're not getting a quote today, one on Friday, the other one next Wednesday, because rates change daily. And unless you're doing it on the same day, you're not actually comparing the loans. It's not a consistent, it's not a really a comparison that you can use, because of the how rates change and what have you. So just make sure you're getting quotes and you're doing it all at the same time. Um, Jump up, Jeb missed some. I missed some. So if I missed questions and you guys were at the top, come back down and I'll try to add them here. So Chill Pro, you probably one of the more common questions I get. What advice I can give to buying now versus wait. You guys that are here every week, what I'm going to say. But you got to think, why are you buying the house to start with? Is it the right time in your life? Do you have a growing family? Do you have needs to own a house? Do you have that longer term time horizon? Do you have money in the bank? Are you stretching yourself? These are things that, that need to be thought about, right? It's not always a great time to buy a house. There's a lot of volatility in the market at the moment. I'm not a believer that you're going to see a crash in prices, but we have risen nearly 35%, 40% in 2 years. A normal market would be great to see. And so with that, if and again, I don't expect prices to really come down much or change very much. What I do expect is less craziness in the market with offers and people waiving things and going way above the asking. I think you see less of that. So if you're a buyer out there and your plan is to buy, within the next 2 years, I'd say now is a really good opportunity because I think the market still does continue to move. Now, again, if you're somebody that's buying and you're going to be moving in 3 years because you're relocating out of state or what have you, then you got to reconsider it. But it's all about the right decisions for you. Everybody's a little bit different in this, right? It comes down to what's important to you, and really the payment. That's really what it comes down to. I mean, I say it all the time, and I've said it, many times. People live in the payment, not the price. So every month you make your payment, that's what you're thinking about. You're not thinking about, hey, I paid $1 million for this house. You're thinking, okay, it cost me $6,000 a month to have this payment. That's what you're thinking about. Now, I'm not saying the price isn't important. I'm just telling you how people think. So that's where you got to come from. Are you able to make that payment over the next period of time? Do you have job stability? All of that good stuff. That's where you need to be with it. Let's see here. My opinion on crass predictions by I don't know. I don't watch the videos. I don't follow them. I don't fall into the idea of what they believe or what people say in their beliefs. So I honestly don't have an opinion because I don't watch it. But I gave you my thoughts on the crash earlier in the video. So just that's my take on that. This is again another one, Vic, that is kind of to each his own. How much money on savings do you recommend someone have before buying their first home? Let's say a $350,000 home for a 30-year loan. Tough. I mean, the Ramses of the world, the Dave Ramses probably say you need a 6-month emergency fund. I don't know what he preaches, to be honest. And that's not a bad number to have. Some people want the you know the comfort of knowing that they have a year, or what have you. But I think probably need 4 to 5 months, at least, in order to be able to comfortably buy. And that's outside of, like, any other sort of emergency fund, right? You should have an emergency fund to some extent. And I can tell you through my career, my life, I've bought property earlier in my career where I didn't have some of these things. But from experience, that's where a lot of this advice comes from. Is like, hey, seeing people make mistakes. Hell, I've made mistakes in this stuff. Coming through and just knowing you have money in the bank. So I think you got to pick a number that you're comfortable with. If you didn't have a job for a couple of months and you still had not only your housing expenses, but you had the expenses of your child care, or going, you still want to go out to dinner with your family, or whatever it is. you got to be able to add that on top of it as well, and find a number that you're comfortable with. But I don't know that there's a hard, fast rule on that one. Let's see here, guys. Let's see. So somebody's asking. So Patrick said, "Am I seeing homes falling out of escrow due to issues with loans, interest rates rising?" So I haven't seen. Well, nothing fell out. So I had one. The home I mentioned earlier in Lakewood, got a call from the agent on the buy side that the buyer basically might not be able to qualify for the loan. But it wasn't because of rising rates. It was a way in the way that they're were calculating the income for that buyer, and so that buyer ended up having to come up with more money down in order to be able to move forward with that loan. But I haven't seen anything that has to do yet with interest rates rising during the transaction or people not being able to qualify because of that rise. It's going to happen. But, typically speaking, most buyers in this market, I can't say most, many buyers in this market are locking rates up front. So they know what they're getting, they know what their payment is, so there shouldn't be a shock when going through the process and finding out this is the payment, because it should be addressed prior to getting there. But as things change, you're likely to see some of that happen. Let's do this. Let's go with that one. So Steve is saying, have you seen a 20% increase in homeowners insurance premiums? I haven't. My homeowners insurance went up a little bit over the past year, but I haven't seen the premiums go up. Are you likely to see premiums go up? Probably, because it's on replacement cost and the cost to build, and as the cost to build and replace these things go up, you're likely to see some increases in premiums and what have you. These insurance companies, that maybe it takes a little bit longer for that to actually take place. But I haven't noticed it or heard of it or seen it. But yeah, with inflation, things are going to get more expensive, and it's going to affect a lot of things, including life insurance. But that's not going to be something, in my experience, it's going to keep somebody from buying a house or disqualifying them or what have you. The premiums really jump rather in areas where you see natural disasters, hurricanes, floods, that sort of thing. That's where you see big premiums on stuff. And as you have years without natural disasters, premiums come down, and then it happens again, premiums go up, and it's pretty cyclical in that regard. All right. I'm trying to find a question, trying to find some questions. Live your life. So, how much can property taxes go up when it's reassessed? So, that depends on where you're located. Here in the state of California, you can't see more than a 2% increase per year in your property taxes. So, property taxes can't go up. So, that means if I bought my house for $200,000 40 years ago, it still can't go up more than 2% per year. And obviously, that's year over year. So with that said, California property taxes typically stay lower long term because of that. Now, some of these areas, I made a video on this last week. Some areas are seeing big increases in property taxes because of the way they do adjustments. You buy your house at X, the neighbor down the street buys a house for significantly more money. Them buying that more expensive house now affects your property taxes because there's a more expensive comp for that appraiser, in how the taxes are calculated. All states operate a little bit differently on this. I've had this conversation with a lot of people here over the last couple of days at this conference, and they all have different things. A lot of states have homesteads that protect it from going up too much. Some states don't have that at all. So it's one of those things that's really difficult to answer because there's no commonality amongst all 50 states. But California, that's the one nice thing that California does have is Prop 13. It allows those rates to stay low. Let's see. Jeff is asking a question. So Jeff looks like a real estate agent with that suit on there. So Jeff saying, can you speak to the Irvine University Park market? I'm seeing a lot 10% over ask. Your thoughts? So I don't know that market specifically. I don't look at comps specifically in that market. But what you have is Irvine is a city that has a lot of demand, and there's a demographic there that has been buying there for a long time, and they want to be there because of the university. They want to be there because of the safety. They want to be there because friends and family live there, and continuing to buy homes in that market, and that's going to continue to push prices up. And Irvine's one of those cities that, as things slow down, it's probably less likely in Orange County. It's going to be one of the markets that continue to stay strong because of how much demand is there. But I can't speak to the 10% exactly, but it wouldn't be surprised. I mean, I sold a house there, a couple months back that we listed at 850, and it sold for $1,100,000. It sold for $250,000 above the asking price. And that was, $850,000 purchase price. That's 30% more than the asking price. So in that case, the 10%, sure. I wouldn't be surprised to hear those numbers, but I don't know the exact number. Let's see what we got. So Ty says, someone recently asked me if my mortgage is a covered mortgage. I don't even know what that means. Can you please advise? So I don't know what somebody means by covered mortgage either. That would be a new term for me. Let's see here if we can find out what a covered mortgage is. See what they're saying a covered mortgage is. See if I can explain it to you. If Josh was here, he'd be able to tell you. I'm not familiar with a covered mortgage, so I'm not even going to go there, and I don't see anything that really jumps out at me with regards to, um, an answer quick. So I'm going to stay away from that one at the moment. And if you're back next week, ask it to Josh, and hopefully we can get you an answer. All right, guys, I'm just going through some questions here. Dave is saying, talk about how much listing agents hate working with unrepresented buyers. So, listing agents hate working with unrepresented buyers. So I think I understand the question. Listing agents love unrepresented buyers because it's an opportunity for many of them to work with the buyer too. But I don't know if that's your question directly. So maybe if I'm not clear, make sure you put it back in there what you're talking about. It's like the silence is killing me while I'm looking for this, because typically we have two people talking. It's easy to bounce off of each other. LV Goddess, my friend is a real estate agent and shared that we wouldn't buy because people will be upside down in the homes within a few years. So Cal, do you agree? I don't agree. I don't agree at all, in fact. But that's me. You've got to take your information, what you believe, and be able to process it and whatever. You shouldn't take one person's opinion on what's going to happen and be able to make your decision off that, right? There's too many people doing that at the moment. There's too many people, in my opinion, worried about the value of their house tomorrow. And I get it, right? You want the value of your house to go up. You don't want it to go down. But if you're buying for the right reasons, it doesn't matter what the value of your house is tomorrow. It's not a stock. It's not, you know, you don't need to sell it tomorrow to do something. And if you do, then you shouldn't be buying in this market anyway. If you've got that 5, 7, 10-year time horizon, I think you're in a good place to be a homeowner. You're going to see pullbacks in prices. You're going to see the leveling out in prices. You're going to see prices go down at some point. The question is from where? Where do they go down from? You guys have heard me say the average homeowner at the moment has $185,000 in equity. It's a lot of equity. Now, in some markets, it might not be 185,000. Maybe that's an average, right? Because some people have 500,000 and some people have 20,000. So it's all different. It's all relative. And some markets might see, a pullback in prices at some point in the future where there are homeowners that are upside down. That is going to happen at some point. But it's not going to be across the board. This is not an 07, 08 deal. This is completely different. We talk about it all the time, so much to the fact that I'm not going to talk about it now. Just buy for the right reasons, and you have less concern of what your value in your property is going to be. That's the best advice I can give you. If there's any advice I can give you at all, it is that. So Kevin says, is it possible to do real estate part-time? Sure it is. There's a lot of people out there that do that. Are they great agents? In my opinion, not really. But I'm also biased in that regard, right? Because it is my profession. I do this full time. You see a lot of part-time agents in the market because they see dollar signs, they want to make money. The problem with part-time is that you're not committed to, the learning, the working, the ins and outs of the business. You get in when it's good and out when it's bad, and you never experience those bad times, and therefore you don't have the experience, in my opinion, to be a better agent. So sure, the answer is yes. Do I advise it? I don't, unless that is your plan to get into it full time at some point. Then maybe you do start part time and make the transition. But if it's always a part time gig, then I think I'm not a fan personally. Got you. I got you. So yeah, so Dave was basically saying that buyers here trying to save 3% by going to the listing agent directly. Um, yeah, but I mean, how is the buyer saving money by going to the listing agent directly? I mean, in this environment, why would a listing agent reduce commission because a buyer goes to them? I mean, I wouldn't. If I were the listing agent on a transaction, the buyer comes to me. Why am I going to reduce my commission because the buyer came to me? I'm not. It's just there's a ton of buyers out there, and got to know your worth as a real estate agent. That's part of the game. I don't want to talk about commissions just because it is a very sensitive subject when it comes to real estate, and not really something that we can talk about in detail. So Nikki asked, with the expected demand slowing, do you think real estate agents and brokers will move on to other jobs? 1000%. Yeah. So the one of the stats is that at the time of during the last recession, if you will, we got down to like 700 and something thousand licensed real estate agents at that time after the last debacle. We are at 1.5 million licensed practicing real estate. There's actually 3 million, 3 million, yeah, 3 million people licensed to do real estate, but only 100, like 1.5 million practice. That's double coming out of the last recession, the last housing debacle, if you will, in '08. You're going to see many people, because it's going to be difficult. It's already difficult for many agents out there because of how difficult it is to work with buyers and get offers accepted and what have you. So you already see that dynamic changing. It's going to be a professionals market in many ways because there is going to be a little bit of shift, more inventory. You're going to have to still do things in order to get your offers accepted, and that's going to take a pro. But the mortgage business, for sure, many of these refi shops, many of these lenders that were in it just for the refinances and what have you, they're going to fall by the wayside, and they're gonna go out. And at some point when the business is good again, any of them come back in it. We've seen it before. It's happened. It happens every single time, and this time's no different. So um, at the moment, let's see here where we sit. I don't have access to it because I'm on my laptop, which you guys can tell is awful, by the way, resolution wise here. But I don't know where we are on likes or subscribes. I mean, likes at the moment. But do me a favor, if you're finding any value at all, hit the thumbs up button. It helps people see it here, helps get it out to more people. So thank you for being in, tuning in, listening to me. While, yeah, again, I'm by myself here, so I appreciate the support, guys. It does mean a lot, and it's the reason that I continue to do it. It's the reason that I'm here tonight, right? I'm not really on vacation, but I'm away from my kids. My bride's beside me, in fact, and so I could be spending time with her. I'm here to help you guys. I am going to cut it short tonight, but that is one thing I wanted to point out, that I am here to still help you guys. So let's see, let's see. So, like to sing says, what makes a real estate agent stand out from others? As a buyer, what questions should I ask to interview agents? So, um, what makes a real estate agent stand out from others? Experience, competence. I mean, like the basic things that you would look for in any professional that you want to hire, right? You need the basics. Communication is a big one. All of those things, trustworthiness, all of that. I'm not going to get into that, but I think you need, buyer's agent. You need to have somebody that's strong in negotiation, somebody that can have difficult conversations, someone that isn't afraid to get aggressive in trying to make things happen for you and repairs and all of those things, right? As a buyer, because it's a seller's market, you need a strong buyer's agent. Otherwise, I mean, can you go in and just pay the asking price and just say yes to everything and get an offer accepted? Maybe, right? I mean, but what's the joy in that? You need an agent that's willing to, take repairs to the agent, talk about what needs to be done, try to get, you some money back in that situation. So strong negotiators, one, a strong communicator, somebody that, gets back to you, does what they say they're going to do. All of those things are important. We could make a show on that by itself. I won't put you through that, but that is, that is the thing to keep in mind, in my opinion. It's just, you need the most important thing, in my opinion, is somebody that, again, is a negotiator, is willing to have those conversations, because that ultimately boils down to money, which, affects your monthly payment, affects how much you pay for a property, all of that good stuff. All right, guys, we're an hour and 4 minutes into this. So Johnny says, long time, first time viewer, long time loser here. So I don't believe that, Johnny, but do you think rents will keep going higher nationwide or lower? So I think rents are probably going to continue to move sideways to up, because you have a lack of available options out there. And I mean, honestly, the rental market is in crazy demand. I just listed a property in Cyprus in my market, and the amount of demand on that property is insane. I mean, it's just incredible the amount of people that are willing to rent a $3,500 property that's 1,300 square feet. And so, with that said, if you have a lot of people that do think there's some sort of crash coming, or some sort of peak in prices, those people, they don't typically go out and sell something and buy something else. If that they think that's what's going to happen, they typically sell and sit and wait. Well, where are they going to go? They have to rent something. And so many of these people, if they've been renting a house, they don't want to go live in an apartment. They want to rent another property or what have you. And so with that, you're probably going to see rents continue to rise. If inflation is, a problem, it is. If it continues to be a problem, that affects everything. The cost of owning that property, the homeowner has, the cost goes up for that homeowner, and that homeowner is going to pass some of that cost on to the tenant in a higher rent. So I think, with that said, you see rents continue to go up. So let's see here. Don't smoke crack says, any harm in speaking with a lender to get pre-approved when they aren't really thinking about buying for 1 to 3 years? No clue how much we would qualify for, and want to be prepared in case the landlord sells. So 1 to 3 years is a long. If you said 1 year, I would say no harm at all. In fact, there's no harm in 3 years. I think you're just very clear with your motives when you make that call to the lender, right? Hey, listen, I'm a buyer, but not I'm 1 to 3 years out. I'm looking to buy a house. This is how much income I make. It's my credit scores, all of that stuff. And let them tell you, hey, listen, this is how much you can afford to buy now. Or this is, maybe they say, ask you the question, how much are you looking to buy? What price point is that? They can work backwards and say, okay, this is where you need to be in order to do that. So I think having the conversation is a good thing. Do you need to have somebody run your credit and all of that? If you're planning on buying 1 to 3 years out, maybe not, if you know your scores, but just having the conversation. Again, a lot of lenders out there can kind of set you on a plan of things you need to do in order to put yourself in the best position at that time. But it's definitely worth a call in order to make that happen. So Vic says, or am I in a hotel? Am I on the run? I am in a hotel. I'm in Carlsbad at the moment. I'm in the La Costa. I was here for a real estate conference over the last 3 days. It ended today. In fact, I left a little bit early in order to make this call to be here with you guys. But yeah, I'm in a hotel. Awful. I'm operating here on a Mac. A MacBook Air from 2014. I think the camera probably has like 360 resolution on it. So that's why it's awful, and the sound's probably terrible too because of the earbuds. But I am here. That's the most important thing. Let's see here. Let's see. Some questions here I can't really answer because I don't know the answers to some of the stuff about, what debt to income ratios are needed in certain markets or what have you, or what I recommend. Let's see. Patrick says, what do you think resolves the lack of inventory issues in SoCal? I see lots of construction, but it seems like mostly apartment buildings for rentals versus townhomes versus condos, blah, blah, blah. That's a really good question. You need construction built. You need new construction in order to correct the problem. Um, you also need, I mean, if you want supply to build, you need interest rates to stay high. You need interest rates to stay high and potentially go higher where it affects affordability and supply builds. That's what corrects it. It allows that supply to increase. Now, I don't necessarily think that's going to happen. And construction here in SoCal, in Orange County where I am, SoCal could be considered a big area, but Orange County, building isn't going to solve the housing shortage, if you will. But building, high rates, slow down in the market, all of that stuff allows supply to build. It's just going to take time for that to happen. Now, I don't think that's something that's going to take place. So I think the market's going to continue. That's one reason why I don't think the market's going to see any major changes, is just because of how low supply is in markets like Southern California. And that's not just a Southern California problem. A lot of problems have a lot of areas have similar problems. I heard a stat today that Dallas, Texas, actually built more new homes than the entire state of California. So Dallas itself built more homes last year than the entire state of California did. So in some context, you see, markets that have that kind of building, those markets might be the ones that correct the issue a little bit quicker than, say, markets like I am in Southern California. Let's see, guys. What do we got? What do we got? What do we got? So I'm going to take a couple more questions, guys, and I'm going to cut it for the night. I got people saying leave and go spend it with my bride, and that is what I'm going to do. But I wanted to be here with you and have some good conversation. Let's see here. So Sam says, why do real estate agents never go for their broker's license? I did. I did it really early on. In fact, the state of California, you have to have a salesperson's license 2 years before you can have your broker's license. I did 2 years and got it immediately, and wanted to be an entrepreneur and go start my own thing. And I did that for 10 years. I was an independent company before making that transition. But it's, a lack of drive and people wanting the responsibility. Obviously with brokers, it requires more. It requires, more education, more responsibility, more of all of that. And occasionally you just get people not wanting to do that. Let's see. All right, guys, I'm looking for some stuff here. I don't know the property tax in North Carolina, so sorry, I can't answer that one for you. What are the chances I make funnier real estate videos? I'm not a very funny guy. I'm pretty, my wife tells me I'm not funny at all. She won't even look at me right now. So yeah, the chance isn't very high for that to happen. Let's see here. Lost a rate locking out, facing 3% increase in a new rate for an investment property. Would you suggest move forward, then refinance later, or back out altogether? It depends. You're buying an investment property, right? So that isn't necessarily something you have to have. It's kind of a luxury, so to speak, in having investment property. So with that said, does it still cash flow? Does it still make sense to buy that property? If you don't buy the investment property, where are you going to park the cash? Right? At the moment, we got inflation at 8.5%. So if you've got, $100,000 sitting in the bank, for example, that you're going to invest in a property in a year's time at 8.5%, you're going to have $8,500 less on that money. If you believe inflation is going to be there in 2 years, you're going to have, $17,000 less in that money. So parking it in real estate, do you get appreciation? Do you get cash flow? Those are all things you have to consider when you're thinking about an investment property. Now, I've been in the market for an investment property for some period of time, haven't found it. Rates have gone up. I haven't had a property that's come across my desk, so to speak, that I've wanted to buy, but rates are quite a bit higher than when I last got qualified. So to me, I'd have to relook and see, does it still make sense cash flow wise to buy that property now? Now, if there was no cash flow and I was upside down, I don't know that I would do it. But if it still had positive cash flow, maybe I would, with the idea that I could refinance later. But that's another one that's, what's your risk tolerance? To each his own. What are you comfortable with? Because I think that's super important in asking that question. All right, let's see here, guys. Uh, uh, I'm not funny. That's cool. No, I'm not. I'm a pretty serious guy. I'm not serious. I'm just like, my mood doesn't change very much. All right, guys, not a lot of questions here. Kind of unpacked everything. If you're just joining in, you want to know about, the Fed meeting, my thoughts on that, go back and watch it at the beginning of the show. Talk about it. If you missed this, again, I'll put it on the podcast for Friday, so you can listen to this little episode on Friday. You'll be able to kind of dive into all the information, get your questions answered on, housing or what have you. We'll be back next Wednesday, normal show, 2 hours. Josh will be there answering your questions. If you haven't done so already, hit the like button if you find any value. Appreciate me being here, because I do appreciate the support that you guys continue to provide. And with that said, I'm out tonight, going to spend it with the bride, a little bit of vacation. Enjoy. Until next time,